Good morning. Super excited to be here and hopefully you're doing well. As you can see, my hair is playing along as if I just woke up, even though I've been up for a while doing stuff. But we've addressed it. Let's move on and talk about things that matter. And what matters today? Let's talk a thing called hypothecation. You might have heard the term, you might have read about it, but you may not necessarily understand exactly what it means, and that's really what I want to talk about today. What is hypothecation? Hypothecation is basically a loan. It's a collateralized or securitized loan. Basically, hypothecation means that you take a collateral, an asset typically, and an asset won't be like a pair of pants, although if you get lucky and get somebody to lend you money for it, go for it. Typically, it's going to be things like cars, houses, business assets, and business assets can be, of course, physical assets, but it could also be the accounts payable, meaning the money that is coming your way. It could also be the insurances. It can be, and that insurances can also be for personal as well. It can be the list of the people in the business. So there's a lot of different things. If you have cash in, say, a CD or a savings account, those also could be basically assets or collateral that you can then pledge to get money. And so kind of this is basically how it works. I'm going to use banks because they are probably the biggest users of this. But of course, sometimes we also use hypothecation. We just don't call it that necessarily here in the United States. And the biggest place where we use it is with cars and houses, right? And instead of calling it hypothecation, we just call it a car loan or a mortgage, right? So we keep it simple. But when you get into the world of finance, of business, of economics, of banking, they sometimes use a bit more complex terminology, which basically means the same thing. Why they do it, I don't know, but I just want to explain kind of how it works. So basic concept is that you would take an asset, say that you have $50,000 in CDs, for example, right? But it's in a CD, you can't access the money without penalty. So what options do you have? Most people will go out and will actually break that contract, pay the penalty, and then take the money to use it for whatever. Banks, however, will take that money and pledge it as a collateral to get a securitized loan and then do whatever they were going to do with the money anyways. It's basically debt. That's really what it is. But what the difference basically is that they will often do it like in the United States. We have laws where you can hypothecate the same assets up to 3 times, I believe, or up to 3x as they call it. So if I have $50,000 in CD, I can borrow as much as $150,000. Now, I know that sounds really crazy, but that's just the way that it's really set up to do. Now, the interesting thing that a lot of folks don't know, and maybe you didn't even know any of these things, but a really interesting thing is that a city of London, which is not to be confused with London itself, City of London is they're basically 2 Londons, if you think about it. There's like the general London, and then there's the City of London, which is this original London that was created back in the Roman times. City of London has its own government, its own police, its own laws, even its own, like, everything. And what City of London is known for is to be basically one of the banking centers, not just of Europe, but of the world. And a lot of banks are located, they have headquarters or at least an affiliate or whatever it's called, right, in City of London. And so the reason they do that is because in City of London, there's no maximum up until of what you can borrow for your collateral. So you can borrow as many as 100 times. So in that example, if you were a bank, for example, and you had $50,000 in CDs, instead of just taking that $50,000 that most of us would think to do, or borrowing like most of the banking institutions would do in the United States, like 3 times, $150,000, if you were in City of London and you were sort of permitted to do this stuff, you can borrow, I don't know, 500,000, 5 million. It doesn't really matter. You can borrow as much as you want. And the nice part about the collateralized loan or securitized loan is that you get a much lower interest. And then, of course, if you're a big player like a big bank or a big venture capital company or big corporation, then you can borrow money for like nothing, sometimes getting it at 0% interest, sometimes getting it at a negative rate, which means if you really think about it, you can borrow 500,000 and then owe back, I don't know, like 4.5 million or something like that. The math doesn't work out exactly the same way, but I just wanted to use some of these numbers just so you kind of understand. Now, how can you benefit from it? And I've already shared or tipped the scale maybe a bit, but you may not have caught on to it. So a lot of times people will hold on to the assets, and the only way that they're thinking about how do I access money is to sell the asset. Now, I want to remind you of what the asset is. Asset is basically something that is bringing you money, right? Is making money for you right now. A lot of times folks will go out and sell that so that they can access cash. Hypothecation allows us to actually borrow money, basically pull the equity, so to speak, out of it. And if you do it correctly, and if you are paying attention to what you're doing and why you're borrowing the money, then you can borrow, the amount of money that is there. Sometimes you can borrow way more than it's valued. Now, that doesn't always work out for us, the small investors. And even if you are like $10 million investor, you're still considered a small investor. So maybe the rest of the folks would be considered like micro or nano investors. But the overall goal is basically thinking differently to say, do I have to sell this asset, or can I just get a loan that is securitized by this asset? Now, if you're going to borrow money, you need to have a very clear plan of how you're going to make money back. What is your overall goal for borrowing that money, and how are you going to create this sort of payment back process and system? So that's something that you will need to work out, like what is the money for? If you just want to buy a new pair of pants or a coat or clothes or something like that, it might not make sense. But if you are using that money to buy a business that is going to allow you to make even more money, then it might make sense to do that. Again, pay attention to what the money is for, look at the interest rates that you're being charged, and then do the math to make sure it can support what you're trying and looking to do. Securitized loans are some of the best ways to actually boost your credit score as well. Most people don't know that. And you can use it with CDs. Sometimes that's a good strategy, sometimes not so much. You can use it with your savings account, with your life insurance. There's multiple ways to be able to participate in this, but you need to understand concepts and kind of how to do that stuff. If this is of interest to you, I do some of these videos, and so I'll probably talk even more about some of these concepts and ideas. I'm doing some videos right now about the credit and credit scores, and I've already done one video, so stay tuned in. And if you're dying to learn some of these things because you were like, oh my gosh, don't tease me, don't make me wait, I have actually written a whole chapter in a book called From Financially Stressed to Money Blessed, that I talk about the way to use securitized loans to basically help boost your own credit and kind of how to do that. It's sort of like a secret money hack, if you would. And maybe because it's published, it's not so secret. But anyways, it is there. So I'm excited to share this with you more in a way to wake you up to what is happening out there and how to think differently about your money and wealth. Until next time, stay forever money blessed, and do remember, you are only one deal away.